Terrific.
Yeah.
Yeah,
Yeah.
that was awesome.
Well,
Yeah,
Bill, thank
appreciate
you.
it.
Bill,
Yeah.
You did a great job.
Thanks,
Yeah,
yeah,
thanks.
thanks. You know.
David.
Yeah, buddy.
David,
Stuff.
thanks, man.
Can I shake everyone's hand too? Yes. Thanks, guys. So you've been hearing about different types of venture and capital and their viewpoints, from the largest SoftBank to some of these smaller regional funds. It's interesting. We had conversations with some of the larger venture firms in the Valley, right? The classic, the Kleiners, Sequoias, and so on. And it was interesting feedback that they could mention one or two examples, but often it was very surprising. Sometimes there were zero, right? Greylock got back to me, and I'm not sure if it's true or not, but just that they just didn't have any investments they could talk about. So I think that's one of the reasons why we are doing this event, right? The capital is so focused on the Valley, right? John Doerr's famous quote, the Kleiner Perkins icon, saying he wouldn't invest in a company that's not off the 101, where he could just drive down and convince a VP of marketing to stay at the company instead of leaving to some company across the road, right? Just hyper-focus. So while that is changing, we do want to make sure we're looking at other sources of capital. And so yet another constituent in this conversation is the private company. And so one of the largest private businesses in the US is Koch Industries. And so we have today the managing director of Koch Disruptive Technologies, which is the venture arm, if you will, to speak with us today. Jason Illian, welcome.
Yeah. Thanks for having us.
Yeah, absolutely. So you're here to talk about emerging tech ecosystems. I think, where are you based?
So we're based in Wichita, Kansas. So
Right.
if you talk about the heartland, we are right in the middle of it.
Yeah, that's right. And where are you personally based?
So I'm based in Wichita myself. So I was in Dallas the last 20 years, but I moved up to Wichita. And so when people say Koch, right, they either think I should run for office or run for cover. But either way, it's a good way to start.
Yeah. One of the things we were talking about was so really kind of what is, for context here,
Sure.
What is Koch, right? And what is the majority of their business? And you had this concept of the atoms and the bytes. Can you talk a little bit, or bits? Can you talk a little bit about that thesis? And
Yeah.
what you're trying to do?
So Koch is somewhat you hear about Koch typically in a lot of the political conversations, but most people don't know is Koch, we have over 100,000 employees. We're over a $100 billion company. And when it comes to talking about blueprint, being in the center of the heartland and building new companies, Koch has been at the forefront of that for 100 years, right? So Koch's been around for a long time. We've got multiple companies that kind of fit that billion-dollar bucket. But what Koch has been really good at, being a private company, is not only developing new technologies, but investing in other companies. And so our particular area, Koch Disruptive Technologies, and I work with Chase Koch, and he helped found this area of it, is we are looking for other companies that can take Koch's traditional industries, which are a lot of oil and gas and glass and fertilizer, and a number of those, which are what we call the atoms-based companies, and those are slamming into the bits, these technology companies that are coming up. And what these two start to come together is creating these next generation of technologies. And if you look back and you look at Silicon Valley and a lot of the great technologies that have come in the last few years, we've been talking about apps and software and a lot of very cool stuff, but the next generation is IoT and biotech and what happens when all this glass in this room is touchable. And that's, we know where you are all the time based on your health and geospatial technologies. And that touches all of our companies. And so and we're private. So unlike a lot of the people that you talk to, we're not a fund. We're investing our own money, which gives us a lot of flexibility. So while other groups are looking at a way to say, hey, we've got to get an exit in our fund, or you have a certain amount of time or certain amount of pressures, we look at it differently and say, hey, if you want to keep your company private, great. If you want to go public, fine. If there's some creative place in between that you should be, and that's what's best for your company and for the country, then we're good with that too.
So let's talk a little bit about that collision in the framework of this conference,
Sure.
right, with the regional focus. This collision of the atoms and the bits. There has been a focus on Silicon Valley and New York, predominantly for a lot of these scaled technology-driven businesses. Can you talk a little bit about it, what's happening regionally?
Yeah.
Where do the regions come into play for you?
Yeah. I think it's helpful for us to take a look at how we just kind of look at the world. And so we look at this from Koch Industries that we believe in creative destruction, kind of Joseph Schumpeter's idea of like disrupting yourself. And what disrupting yourself is pretty simple. I look at it as you can pull the gun out and shoot yourself in the foot, or you can hand it to the market and let it shoot you in the chest. So we'd rather limp. And so what we're constantly doing is saying, how do we disrupt our own companies? And that's uncomfortable at times, right? To say that we have a company that's growing and it's doing exceptionally well, but how do we kind of take the next step, draw the next S-curve to find out the new opportunities that are there? And it's not just for profits. While we do want to make money, right? And that's what allows us to stay private and do the things we need to do. At the same time, we also want to create jobs, right? We also want to build new industries. We want to make people's lives better. And by doing that in such a way that we're giving entrepreneurs an opportunity to build that in any part of the country or world, we think it's a huge benefit. And coming from an entrepreneur's background, I was building tech companies for the last 15 years. I think it's very freeing to be able to have a conversation where there's not a pressure on, you've got to go public or you've got to have an exit, where there's more of a conversation of saying, hey, what's best for the company and how can you grow it that way?
Yeah. So Steve Case, we just heard from a representative of the Rise of the Rest, he wrote this book in 2016 called The Third Wave, right? That kind of meshes with your approach here. Right? So the first wave, and he was part of it, was AOL building out the internet. AOL was not in one of those two regions, and a good part of the early players, IBM and others, were not part of Silicon Valley or New York, right? So that was distributed, building the internet. And then there's the apps on top that came, right? The internet revolution the app revolution that followed. That's where the Valley sucked everything in,
sure.
Right? The mobile revolution and so on. And it pretty much had to be there, right? If you were building on the operating system of Apple and Cupertino, or of Google's Android and Mountain View, you had to be there, and the players that weren't, Nokia, Microsoft, kind of lost out on that revolution. But Steve is saying now the third wave is going back to the regions, right? Sure. You're infusing this technology back into your business. You mentioned carpets, windows. So if that was written in 2016, we're in 18 now. Where are we in that trend back to the regions? Right? And what surprised you? Has it been faster or slower?
Yeah, that's a good question. I'm not sure I know the exact answer to that. I think that sometimes we see innovation as a dramatic event when it's really just a process of progressive awareness and incremental change, right? And so what's been happening the last decade, where you're seeing new ecosystems grow up in Omaha and Indianapolis and Miami, and people talk about Texas and Austin, but they're missing out on Dallas and other areas. When you're seeing ecosystems grow. Now, as those ecosystems grow, talent is being drawn there for various reasons, because sometimes they grew up there, sometimes they came out and couldn't afford it out here, or didn't like on one of the coasts. Yeah. But what's happening is these ecosystems are starting to change, and at various times they're taking advantage of the geographical benefits of being there, the talent that's starting to be there and starting to grow up, and then just being able to have the opportunity, right? I mean, I think opportunity is not always equally distributed. That's the problem, is that we have great talented people all over the country. I mean, Koch, we have offices here in Reno, right? So we have offices in Corpus Christi, and we have offices in Minnesota, and we have offices all over the place, because we believe there are great people there that can do a great job. And one of the problems you often see on the coast, especially in the New Yorks and Silicon Valley, is there's no loyalty to that company. You'll see talent be there for a year until the first round of their equity or their options vest, and then they're on to the next company. And so what happens is talent's trading all over the place, where when you go to a place that people are dedicated to this, they can truly do something special. But building a special company does not happen. It's not an overnight change, right? All the best overnight examples you have were 15 years in the making. And that's when the team became completely dedicated to it, wherever they were in the country or the world. And they became dedicated to it, and they brought other great people around them to build that over time. And that's what we want to be part of, is saying, hey, how can we be part of growing those companies? We're not good, as Koch Industries, we're not great at kind of the early stage companies. We don't do a lot of investments in, I guess, typically A and B rounds. We typically do B plus, C plus rounds. So our group specifically is trying to deploy capital at 25 million to 200 million at a time, and that's where we focus. And so we work with great community leaders, incubators, other VCs that are in the region saying, hey, we have companies that we're growing up, but they start to hit the ceiling because they can't find the growth capital, or not even just the capital. Who can they talk to? Like, who else can they help plug in? So as an example, we have a handful of companies that are piloting things with Koch. They're earlier stage companies, A and B stage companies, but if Koch becomes a client for them, they'll grow 10x overnight because of the ecosystem and size of our company. So we're not specifically a fund. We have kind of fund capabilities, but we're a giant operating company, and we're private. And so we can structure things. We like to think we can structure things that are in the best interest of the company and us at the same time.
Yeah. There are a lot of regional constituents here. I do want to open up to questions, but can we start with a question about what you are looking for from regions? I mean, do you have an agenda? Is there regulatory recommendations you can make and so on?
Yeah, so the great thing about Koch is we actually don't have an agenda when we look all over the country and world. So as an example, we just made an investment in Israel and a company called Inside Tech, and it is a non-invasive focused ultrasound company. So the company's been around for 10 plus years, and you're probably thinking, what does Koch know about medical? The answer is nothing. We don't actually have hardly anything in there, just a very little bit. But they built a technology where you basically sit in an MRI machine with a special helmet, and with about 1,000 different lasers, they ablaze the part of the brain that deals with essential tremors and Parkinson's disease. And so you walk in, you sit in this machine, 2 or 3 hours, you walk out, and your tremors are gone forever. They've done over 10,000 already, and it's gone 99.9%. And we thought this company's truly transforming medicine. And so when we look to invest, we don't look specifically at industries and say, hey, we have to do something in geospatial, or we have to do something in industrial automation, which, by the way, we're looking at all these. But we're not looking at that. We're saying, what capabilities that can we extend that we have into those areas and help these companies along? So we are looking at industrial automation. Obviously, we've got warehouses all over the world. We are looking at big data and AI. We're looking at areas where agriculture, middle America stuff, we have a lot of fertilizer and agriculture things, but we want to continue to evolve in that area. And we think there's brilliant people in this room and probably in different regions that can add to that. And we're looking at software and hardwares too. So we're looking at robotics, and we're looking at a lot of B2B software. And we probably don't do quite as much on the B2C software side of things, but there are some areas that are interesting to us.
Right. So can we talk a little bit about, it's back to the regions. In our prep, you've mentioned a few places: Indianapolis, you mentioned the South and Texas, Arizona, New Mexico, Colorado.
Yeah.
So those are specific names. Why do you choose them, and what is relevant about those particular areas?
Yeah.
Why do they pop up as opposed to others?
Yeah, that's a good question. You know, I've heard the question asked on a couple panels, like, what most surprised you about regions?
Yeah.
And I don't think I'm surprised about regions. I'm surprised about people and entrepreneurs. Like, there are some really great entrepreneurs in some of these other regions, and for various reasons, right? Could be family, could be they know and they're really connected to their region or whatever. Who knows why they're there? But they've built an amazing ecosystem. And because they're so dedicated and they have such deep knowledge of the understanding of their area and the area that they're playing in, we're drawn to that. And we're drawn to that because we're not necessarily sold on being East or West Coast either, right? So we've looked at things in Indianapolis because we've been connected there, and we've done other investments, and people have said, hey, there's some really great talent here. And so the more we've dug in, we've seen that. Same thing as in the Phoenix area. You know, there's an ecosystem growing there that, I didn't know about earlier on. And, I'm from Texas originally, and so when everybody says Texas, they automatically think Austin, but they're leaving out San Antonio and Houston and Dallas and some of these other areas. But there's a lot of great talent there that are working on things that may be early on, but even because it's early and maybe we can't invest right away, that doesn't mean we can't add value. And so when we look at companies, we look, is it a matching vision, value, and complementary capabilities? And if we can get on the same page with vision and values, right, we believe the way they're going, and we can add something. There's companies that we haven't invested in, but we've tried to help along in some way, shape, or form, either through our own network or extending our network.
Any questions for Jason? Yeah, can you shout it out, or I'll repeat it.
On disrupting, how do you think about disrupting the social components and sort of spectrums of diversity in companies? Sort of like, you know, what does AI look like when it's built by a bunch of white guys like me?
Sure.
Versus the alternative?
Yeah.
And then what's disruption for you, and is that interesting?
Yeah, it's a good question. You know, if all we're building is great companies that make a lot of money, and they don't actually add or make some change to the social fabric, I think we kind of need to step back and ask ourselves what we're doing. And so I wouldn't say that we do this perfectly, but I would say it's in the forefront of our thought that when we're looking at companies, we're saying, how does this increase in kind of inclusive behavior, including more people in the discussion? How is it more cooperative across not just companies, but across races, regions, religions? And how do we include more people in these conversations in such a way that there is progressive social change in those? And I think that the challenge that we have, and I say we as Koch because when you hear the name Koch, right, you often hear the people join on both sides, right? They're either our friends or they're throwing hand grenades at us sometimes, and some of that's our own fault, honestly. It's our own fault because we haven't always done a good job of raising our hand and just painting and telling our own story and our own narrative of what we really believe. And a lot of that is the same thing that everybody else is fighting for, where we believe in free markets, right? We believe that more people should have a seat at the table, that there should be less necessarily white guys designing all these companies, but what happens to the Hispanics and Latinos and African American and Asians and men and women and across the spectrum that should be there. And some of the great leaders that I've seen today aren't like me, right? And I'm actually drawn to people that are not like me because I feel that adds value to my life. And so I'm always looking for that. Now, does that mean that every single one tomorrow is going to be a minority investment in a region you haven't heard of? No. Yeah. But I hope we can do more of that. And I hope Koch can be part of the bigger conversation.
Any other questions? You know, you alluded to that, you know, the public perception. You mentioned you don't have an agenda and location, but presumably there are certain tenets that you would be, you know, maybe that are linked with entrepreneurial activity that you would be looking for from a region, right? And one of the, I don't know if you were there for the earlier part of the event when we were talking about what made Tesla possible for Reno. But it was pretty decisive when I took the tour of Reno. You know, the individual taking me through was definitely not one of the higher executives, but he was very informed with how it came about, and he was saying that the governor made it happen, but the county level just moved as quickly as possible. It was speed. It was simply speed, regulatory friendliness. There were 4 or 5 other really hot competing places for Reno. For Tesla. Maybe can you talk a little bit about that? Do you see a wide variety of regulatory environments, and does Koch have a philosophy on driving that? Yeah, so I think the key to understand about what regulatory environments and policy changes, speaking from an entrepreneur's perspective, the best thing is just like, we just want them to get out of the way, right? We just want to build great companies, and when there's large amounts of regulations or large amounts of taxes or any of these things, they keep us from building great companies that can create exponential change. And so I think that Koch's approach to this is saying, hey, how can we best speed things along? So if you look at the opportunities out there, there's huge opportunities to change real estate, but there's lots of regulations around real estate. There's huge opportunities about AV and EV and the self-driving cars, but what does that look like? Or if you want to fly drones, right? You can only fly them at so high, so many feet for so long, and they got to stay within eyesight. Like, there are regulations stopping us from becoming great entrepreneurs and building great companies. So our approach to that is like, how do we help get at the forefront? And we spend hundreds of millions of dollars every year trying to be in. Charles Koch just wrote an article with Tim Cook of Apple, and sitting at the forefront of this, saying, hey, there needs to be less regulations on these entrepreneurs. We'll stand at the forefront and put our own money on this, saying,
We want to see less of that, and if we can pave smoother paths for entrepreneurs to get there, if what would normally take you 10 years to knock down a wall, if we can help you do it in 4, then that goes above and beyond just a capital raise. Yes, we can raise capital. We have money, we can invest that. But at the end of the day, we want to say, like, hey, how can we knock down policy barriers and change? How can we invest capital in a meaningful way? And then how can we help these companies? And we have multiple companies that some we've invested in, some we haven't, that are piloting things at Koch. We call it kind of our Koch as a lab. So these companies are doing stuff inside of Koch, and if it takes off, their company will grow 10x overnight because it's just the sheer size of our ecosystem. And so there's multiple ways that we can work with different regions and different companies. And we kind of see those all tied together. They're kind of, they're strands of the same thread that kind of are intertwined.
So Jason, we're running out of time, but I think we have time for one last comment or a question if there is any questions. I guess my concluding question would be, you've heard a lot. I think you've been here for the whole event. Is there anything that's particularly provoked you or impressed you, angered you in terms of the conversation that's happening over the last day and a half?
No, definitely nothing that's angered me. I mean, the thing that I'm most impressed about, and the thing that I try to impress upon people when we come, it's easy to come to these events and put on our name badges and talk about what we're going to do, but then what goes out, not a whole lot of additional change happens. And so you can walk out of this room with like 15 business cards if you want and 35 people to follow up on, but the real challenge is, what is the 1 or 2 things you can do? And the areas that I've seen exponential change happen is they've created a bunch of small wins. They weren't trying to change the world, they were just trying to change their local community, like small. Yeah. And then that grew into something bigger, and then somebody else that believed in them, they bolted on, and it became bigger. And so we often talk about, like, we got to change the world. No, we don't. How about we change our family? How about we change our community? How about we change the local bakery? And when those things start to change, then these grow into a much larger conversation where other people that have that same belief can come in and bond with you on that. And those are the people that I think are creating real change. It's not all of us that are putting big chunks of capital. It's those people. It's those people that are making changes in their community that will eventually become long-term changes.
Great. Thank you, Jason.
Thank you. It's good to see you.
So we're running a little late.